Hello, class. This is Professor BigFoot, and today we'll learn how the rich seem to pay less taxes legally and illegally. First rule of the jungle: not all tax tricks are the same. Some are legal paths through the vines. Others are traps that land you in a hunter's net. We call the illegal kind tax evasion. We call the legal kind tax avoidance. Repeat after me. Evasion is crime. Avoidance is planning. If you confuse them, you'll feed the prison parrots instead of your banana fund. So let's split the peel. Section 1, tax evasion. Section 2, tax avoidance. Take notes. This saves bananas. Tax evasion means lying to the government about bananas you earned or where you hid them. Underreporting income is the classic rotten peel. Example: a house sells for 700,000 bananas, but they report 500,000. Less tax, more trouble. They saved 20,000 in tax. They bought a lawsuit instead. Another trick: hiding assets offshore. Years ago, some Swiss banks were famous for secrecy. That secrecy shrank. Today, many countries share account info. Hide bananas, expect a knock at the cave. If you earn it, you must report it. Period. Third trick: false deductions, claiming costs you didn't pay. Our friend Sarah owns a Pizza Hut in the jungle. She spends $3,000 on improvements, claims $30,000. Presto, lower tax, higher risk. When the audit vine swings your way, it snaps. Evasion looks clever in the short run. Then the fines arrive. Then the cuffs. Class rule: if it requires lying, shredding, or secret caves, it is evasion. Evasion steals from the jungle roads, schools, and tree clinics. So don't, ever. But you may ask, Professor, why do some rich monkeys say they pay little tax and still sleep fine? Because what they practice is not evasion, but avoidance, using the rules instead of breaking them. Avoidance is the art of bending the branches without snapping them. It's about using the jungle law in your favor, not hiding bananas in the dark. Think of tax avoidance as treasure maps printed by the government itself. It's not cheating, it's strategy. One popular jungle trick: controlled foreign corporations. Big companies move profits to low-tax islands, where bananas barely get taxed at all. Even Apple saved billions this way between 2009 and 2012. They used Ireland's and America's different rules against each other. Result? Tens of billions saved in taxes, legally. Another clever move: transfer pricing. Companies shift profits between branches to land them where taxes are lowest. Think of it as moving bananas from the heavy tax tree to the light tax tree. Wee shoes sending profits to the Cayman Islands. US shows $200,000 taxable. Cayman shows zero. Who wins? The company. This way, they keep 930,000 bananas instead of 650,000. The catch? They can't always bring those bananas back home without paying later. Sometimes they reinvest abroad, waiting for tax laws to change. When rates fall, they repatriate profits and still save a bundle. Another move: earning through dividends instead of salary. Why does Warren Buffett pay a lower tax rate than his secretary? Because dividends and capital gains are taxed less than ordinary income. So a monkey earning 100,000 bananas from salary pays more tax than one earning it from stocks. This isn't magic. It's the design of the jungle tax code. So class, remember the split. Evasion is crime, avoidance is strategy. One will get you cuffs. The other may get you applause from shareholders. But don't mistake avoidance for free bananas. It still requires careful climbing. Some moves aren't avoidance at all. They're deferral, just paying later. Like stuffing bananas into a retirement sack, you'll still pay when you eat them. Avoidance lowers the bill. Deferral delays it. Class, if you remember nothing else, don't confuse them. Evasion gets headlines and handcuffs. Avoidance gets headlines and handshakes. Both change how much tax you pay, but one destroys trust, the other builds it. So next time you hear a rich monkey brag, ask, evasion or avoidance? Class dismissed, but never stop questioning how the tax vines twist.